Guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about ARK ETF. Now, ARK Invest has a variety of ETFs and it's managed by the one and only Cathie Wood, who is pretty much a huge, growth investor, right? She loves Tesla, she loves Roku, Square, a lot of these companies that are, one, they're front runners in their sector. Two, they're establishing dominance in their sector, right? So ARK, ARKK, a lot of people think is overhyped, overvalued, and everything like that, right? We have the legendary investor, Michael Burry, who is actually shorting this stock because he thinks it's gonna crash and burn and completely fall back down to $30 or $50. But I honestly think that's not going to happen, right? Now, for those of you that don't know what's in this ETF, ARKK, the top holding is Tesla, Square, Roku, and Teladoc, right? All companies that are very, very establishing their dominance in their sector. Tesla, the pretty much electric vehicle powerhouse. Square, the fintech powerhouse. Roku, the pretty much technology powerhouse. Teladoc, there's just a ton of awesome companies in this ETF. And yes, this is definitely 100% a growth ETF for sure, just because you guys can see it is volatile. It has a return of over 430%, which in my opinion is absolutely fantastic, because as an investor, you always hope that momentum is going to continue. If we go ahead and we look at the 3-year outlook, you guys can see in the first year, it actually sold off about 18%. The next year, it was pretty much at a break even, maybe up, 5-6%. The next year after that, you'd be up 200%, then another 235%. And if you just held it, you'd be up 157% in value. If you compare that to like the S&P 500, the S&P 500 has an annual return rate of around 9.8%. In the past year, it's a little greater just because we've seen so many dips in the market that brings a lot of opportunity. And that's kind of what I'm getting to with here, right? We've had this huge bull, huge amount of buying pressure among this ETF. In almost every ETF or investment, it cools off after a certain period of time. And that's what we're getting. This is a very common move. You guys can see, look at the RSI. Look how high this thing was overvalued, right? Anytime it's in the red, that means that there is a lot more buyers than sellers. That means it's, overvalued. So we had a little bit of sell-off. Back up here, a little bit of sell-off. And then this massive move before selling off. Even then, it normally will come down to about a 35 or a 30 on the RSI, and it's still right now at about a 51.50. So yeah, it probably could sell off a little bit back down to probably about 100. I think that's where this is going to find some super strong support, is near and around that $100 mark. But for those people that are saying that Tesla and all of these companies are doomed, I think they're completely wrong. I think the outlook is extremely volatile, just like any other stock is. If you look at Apple when they were when they first IPO'd, Apple fell 20% in value. I believe it was like 26 times before it had this crazy return. So I think that all these people that are saying that it's doomed, I think, yeah, a short-term sell-off probably, but for this stock and for this ETF to take a massive crash, that would pretty much cause the general market to just sell off. If anything, you could say the general market's a little overvalued more than the ARK indexes. That's just my opinion. I think Cathie Wood is a legendary investor, and if you compare it to Michael Burry, who was right about a variety of stocks. He bought into GameStop, he bought into a variety, right? He's known for shorting pretty much the 2008 crash. I think he is one of the smartest investors out there, and I'm saying he could be right for a short-term sell-off, but for a long-term trend, I think that honestly, most investors would actually benefit from a crash. I would. The reason why I say that is because if we pull this back up, right? My average cost for this share is right around $105, $110. Okay, so yeah, I'm still up a little bit on my money, maybe $10, $15 a share. But imagine if this thing fell back down to 100 or 90. That would just bring massive amounts of opportunity to buy one of the most sought after, pretty much the best ETF for the long term. I think that this is a fantastic one. Okay, this is pretty much just a flagship fund, and it's a complete buy in my opinion. I think sell-off brings opportunity, and that's the only mindset you have to have as a long-term investor. And Michael Burry has been wrong plenty of times, but overall, guys, I think at the end of the day, it's nothing to be worried about. I would benefit from a crash. So that is it. I hope you guys enjoyed it. And if you did, hit that like button and subscribe. Don't forget to check out my course, and we will see you guys later. Remember to stay happy, stay positive, stay safe. Take care.